Okay, so I hope I am audible and visible clearly. There's no issue. I hope I am audible and visible clearly. There's no issue. Please tell me. Yes, so I hope I am audible and visible clearly. There's no issue. Yes. Okay. Okay. I think I am audible and visible clearly, not an issue. Okay, so now let's start with chapter number 1 of our ACCA AAA syllabus, and this chapter is going to be very important because here we are going to discuss about the international regulatory frameworks. Now, why is the study of international regulatory frameworks important for you? Because once we get into the audit, we will be discussing about a lot of standards. A lot of places would be there when we would be discussing about who has particularly set that standard, what are the expectation out of that standard, and we are going to discuss about a lot of things. So before we do that, we should be aware about that what are the standard setters, what are certain standards that are available, what is the importance of regulatory provisions, and once we are sure about that, then we will be in a position to say that yes, we understand the audit in full. Okay, so now we are officially moving towards chapter number 1 of international regulatory frameworks. Okay, so when I say international regulatory frameworks, what do I exactly mean by it? I'll tell you once. Okay, say for example in India, if we follow the standards on auditing, then there's a body who issues it, right? There's one committee that issues it. If we follow the accounting standards, there are certain committees that issues it, right? Similarly, when we talk about the international regulatory framework, that is the regulatory frameworks in the context of international environment, there are certain organizations, there are certain committees that issues these standards. Okay, is it mandatory to follow? We will discuss about it, for which organization it is mandatory, for which organization it is not mandatory. Okay, so just to give you a brief of the discussion that we are going to do today, we will be discussing about IFAC, then we will be discussing about scope and development of ISS, then we will be discussing about standard setters, then we will have a discussion about what is public interest, then we will discuss about certain bodies that are there whose regulatory provisions we need to follow. Then we are going to discuss about the impact of corporate governance on audit and assurance practices. Then we will discuss about UK code main principles. Then we are going to discuss about audit committee, and this would be one of the discussion that is going to be very core, and this is very important from the exam point of view also. Okay, and then finally we are going to close this discussion for today of chapter number 1. So that becomes our very important discussion for today, and after this we will move towards chapter number 2, money laundering, and where we will be discussing about some of the key factors of money laundering. Okay, so that becomes really important and challenging for us. Okay, now chapter number 1, when I say chapter number 1, what do you need to understand here? We need to understand the regulatory provisions in the context of international frameworks. Okay, so number one thing is we should be well aware about the objectives of this chapter. Okay, so explain the need for laws. What is the word here? What is the word here? Need. Okay, explain the need for laws, regulations, standards and other guidances related to audit, assurance and other related services. That is what is the need. Okay, then outline and explain the need for the legal and professional framework, including public oversight of audit and assurance practice. There we will be discussing about certain bodies. Then the impact of corporate governance principles on audit and assurance practice. Are we going to cover this? Yes. Then discuss the role of the audit committee. What is it exactly? Audit committee. Okay, are we going to discuss in detail about audit committee? Yes. And its impact on audit and assurance practice in relation to the relationship with the external auditor, the oversight and approval of provision of non-audit services. Are we going to cover all of this? Yes, we have just scrolled our syllabus and we are going to cover all of this, so there is not going to be any issue regarding this. Okay, understood. Okay, now International Federation of Accountants. Let's discuss about this first. What is IFAC? Whenever we say IFAC, okay, do not spell it as IFAC, spell it as IFAC. Okay, whenever we say IFAC, it means International Federation of Accountants. This you can understand as the supreme body which has multiple standard setters, which has multiple committees inside it, or which includes multiple committees that sets various standards for the auditing and assurance profession. Okay, not just for auditing and assurance but for the accountancy, professional accountancy profession as a whole. Okay, so what is the mission and vision of this IFA? Let's first of all discuss about that. Let's discuss about the vision first. So the vision what it wants to achieve in the long term is that global accountancy profession is recognized as a value leader. Its vision is that global accountancy profession should be recognized as a valued leader in what? In developing strong and sustainable organizations, financial markets and economies. That is, it wants to set its footprints in the form of a global accountancy profession, in the form of a valued leader towards developing sustainable organizations, financial markets and economies. That is, it wants to move towards the sustainability. Okay, now when I say public interest, serve public interest, so serve public interest, the mission is to serve public interest. What is the public interest? We will be having a good discussion about it after few pages. Okay, so serve public interest by contributing to the development, adoption and implementation of high quality international standards and guidances, both in the form of accountancy standards, both in the form of auditing standards, assurance standards, other related services standards, etc. Contributing to the development of strong professional accountancy organizations and accounting firms and high quality practices by professional accountants, promoting the value of professional accountants worldwide and speaking out on public interest issues where the profession's expertise is more relevant. Do you need to remember this word by word? Definitely not. Do you need to have a good idea about it? Yes. Will there be a direct question on this that please write it? No, it will not be possible, right? Okay. So this is going to be little important for all of us. Okay, now scope and development of ISS. When I say scope and development of ISS, so scope is there and development is there. Let's discuss the scope first. Okay, so all standards relevant to the audit process for an organization must be followed. That is, whatever standards we are talking about, if it is applicable to an organization or applicable to an engagement, that must be followed. Is there a choice not to follow it? Must be. That is mandatorily be followed. Is there a choice not to follow it? No, there's no such a choice that is given that you cannot follow it, or there's a choice that you cannot follow it. Even if you have certain deviations, you have to clearly explain the reasons for such deviations in your report as well. So ISS require auditors to use their professional judgment when applying them. That is, you do not need to blindly apply, you need to apply your professional judgment also, that in what case what is applicable. However, you need to apply all the requirements. You cannot take a professional judgment that deviates from the standards. However, in exceptional circumstances, if auditor departs from the requirement of the standard, the departure must be justified in the working papers. That is, the departure, whatever departure is there, say the standard tells you to do one thing, you are doing another thing, then you have to justify that departure in your working papers in a detailed manner. Okay, now, so must be followed? Yes. Can we depart? Yes. But once we depart, we have to justify in our audit working papers in a very, very clear manner over here. Okay, now an auditor Okay, an auditor can only state compliance with the ISS when all standards relevant to the specific circumstances of the audit have been complied with. Okay, an auditor can only state compliance with the ISS when all standards, all standards relevant to the specific circumstances, that is in a particular auditing environment and a particular accounting and auditing environment, when all these standards have been followed, then only you can say that you have followed ISS. So for example, if there are 30 standards, okay, and you have followed say 29 standards, okay, can you say that you have followed, that you have conducted your audit in accordance with the requirements of international standards on auditing? No, you cannot say that. So an auditor can only state compliance with the ISS when all standards relevant to the specific circumstance of the audit have been complied with. Okay, now development. How does it get developed? How are these standards supposed to be developed? So project, proposal and input. So project as in what? Project as in the standard. So for example, now if anybody says that there needs to be a separate standard on say digital currency, okay, so standard on auditing on digital currency, that is how do we audit the digital currencies, okay, so that project would be proposed and it would be approved. If approved, project assigned to a task force as in who has the responsibility to research and draft, who has the responsibility to do what, research and draft, okay, research carried out and exposure draft is prepared. Research is carried out and exposure draft is prepared. What is this exposure draft? This is the draft that is circulated to the public at large to gain their inputs. Now this draft means what? The exposure draft. Draft means what? The exposure draft. Exposure draft placed on IFAC website and distributed for comments to member bodies, interested parties, and you'll be amazed to know to general public also. And general public also. Okay. Comments are received. However, will you say that every comment will be incorporated? No. We have to see that what all comments have merits, what all comments have the logic, the rationale, and then we will do it. So, and consider draft revised and reissued, but when? If significant comments are there, if significant changes are there, okay, draft as in what? The exposure draft, okay. Then revised ED as in the exposure draft is approved and issued as a standard. So whatever standard we see today, that must have followed this process, that is the project was proposed, then it was approved, then it was assigned to a task force, then they drafted it, then they circulated it, then they invited the comments, then they considered the comments, then they again revised based on the comments, and then they issued, then they again got approved, and then they got issued as a standard. Okay, so I hope this is clear. This is important. I hope this is clear. Yes. Now standard setters are there. When I say standard setters, these are the committees or the bodies that sets various standards. Any questions so far? Please let me know. Any questions so far? I can read your chats. Please tell me. I have my phone available over here. Please tell me. Yes. Are there any chats? Anything that you would like to speak to me about? Any doubts? Any queries? Yes. Any doubts, any queries? Okay, so before you say it, I'll tell you certain important things over here. Okay, see, I've already told you about how do you need to connect with me on YouTube, Instagram, or Telegram, or LinkedIn. Okay, I'll tell you again. On YouTube and Insta, you can connect with me via my username ACCA with CA Supreet Agrawal. Okay. Telegram, I am available by the name of ACCA with CA Supreet Agrawal. Okay. On LinkedIn, I am available by the name CA Supreet Agrawal. Okay. If you have to buy my courses, then you have to log into our website, which is www.bbvirtualsglobal.com. Okay, so I hope this is clear. Okay, now standard setters. When I say standard setters, what do I mean by it? So we are going to study about FATF here. What is FATF? We will discuss. What is IASB? We will discuss. What is IAASB? We will discuss. What is ISBA? IESBA? We will discuss. What is OECD? We will discuss. Okay. To have the consistency and to allow you to have your knowledge testing also, what I have done is I have not mentioned the full name here. What I have done is I have mentioned the full name on the first line of everything. Okay, so that whenever you revise, you can test your knowledge first by writing it there, and then you can move forward. Okay, so number one, what is FATF? FATF is Financial Action Task Force. Financial Action Task Force. This is primarily important in your money laundering chapter number 2 that we are going to study today, money laundering. There you will see that this becomes really important for you, FATF, because Financial Action Task Force has the objectives which are very much aligned with money laundering. Okay, then we will discuss about it in detail. Now, purpose is to develop and promote national and international policies. What is the purpose? To promote national and international policies to combat money laundering and terrorist financing. That is, they want to reduce or they want to eliminate the cases of money laundering or terrorist financing, and that is the core objective of this FATF, which is Financial Action Task Force. They create standards, they create national, international policies for the purpose of avoiding or for the purpose of eliminating money laundering and terrorist financing acts. Okay. Then IASB. IASB stands for International Accounting Standards Board. As the name suggests, what is International Accountancy Standard Board? What does the name suggest? What does the name suggest? International Accounting Standards Board. What does the name suggest? That it might be creating the IFRS, the accounting standards, right? So, committed to developing high quality, understandable and enforceable. High quality as in which will be very much qualitative, which will consider all aspects. Understandable, which could be interpreted by the professionals, and enforceable, which can be enforced at the ground level. Okay. Global accounting standards, generally in the form of IFRS. Okay. When I say high quality, it means covers all aspects. Okay. Understandable by professionals. I'm not saying by general public, but by at least by professionals. Enforceable at the ground level. Okay. Now, cooperates with national accounting standard setters. In our case, for example, in India, you will see that there might be a lot of other standard setters that are working to develop the Indian accounting standards. So, one task of this IASB is to help, or is to converge, is to talk to, is to discuss with these national standard setters to achieve convergence in accounting standards around the world. For example, in India, you will see that a lot of our requirements of Ind AS are being taken care by IFRS, right? Now, it is not that we have copied or they have copied or anything. What is the truth? That everybody is working in convergence to make global accounting vision happen possible, right? That is very, very important. Now, IASB is responsible for developing and approving international financial reporting accounting standards, that is called as IFRS, and this is one important thing that you need to remember. Okay, so here example could be just like alignment between IFRS and Ind AS is there. IFRS and Ind AS. Ind AS is of India. Okay, understood? Now, IAASB. What is IAASB? This is going to be very, very important. In fact, I could say most important for our discussion. For our discussion, it is going to be most important. International Auditing and Assurance Standards Board. International Auditing and Assurance Standards Board. International Auditing and Assurance Standards Board, IAASB is there, which is supervised by IFAC and subject to oversight of PIOB. Supervised by IFAC and subject to oversight of PIOB. Now, what is this PIOB? We will discuss in bodies discussion. Okay, PIOB. Okay, so what is this PIOB? We will discuss after a few pages. So, supervised by IFAC and subject to oversight of PIOB. Okay, issues high quality auditing and assurance standards that we have discussed. No, that in our case it is going to be very, very important. So, example here could be ISS. Okay, ISS could be the biggest example over here. The quality management procedures, the quality management standards are also issued by IASB. Now, ISBA. ISBA. What is the meaning of ISBA? ISBA is International Ethics Standards Board for Accountants. Now, my friends, please do not say it as ethical. A lot of students writes ethical over here, which is wrong. International Ethics Standards Board for Accountant. Okay, this is important. International Ethics Standards, and this is also wrong over here. It is not board, it's Board for Accountants, which is ISBA. ISBA develops ethical standards. ISBA develops ethical standards and guidance for use by professional accountants. So, when we will move to further chapters, we will have to discuss about one concept called professional ethics. When we will be discussing about professional ethics, you will see that we will be using the guidance given by ISBA only. Okay. Now, will we solve questions? Yes. In tomorrow's session, we are going to solve questions from chapter number 1 as well as chapter number 2. The questions are going to be from the ACCA study hub, but are we going to use the other publishers' questions, the reference materials questions as well? Yes, we are going to cover that also. However, to do that, we have to complete some section of our syllabus, because in those reference materials, the questions are given section wise. Okay, so say from chapter number 1 to chapter number 4, when we complete, then we will be able to solve the questions from that particular reference material. Okay. Now, OECD, this is something new that you might be hearing, right? OECD is something new. OECD is something new. So that becomes really important. Okay, so Organization for Economic Cooperation and Development is called as OECD. Organization for Economic Cooperation and Development. See the objective of it, you will be amazed. Okay, it promotes good governance and corporate activity by doing what? Helping governments by providing surveys and reviews of key economic areas. That is, this organization has the purpose, the mission and the vision to conduct the surveys, to conduct the reviews, and then give it to government for the purpose of economic development. Now this is something really important, no, that at the ground level there is one organization that is working, that collects the data, that surveys and that collects the reviews and then gives it to the government for the purpose of decision making, and this becomes really important for us to understand. Now public interest. What is public interest? So have we covered all the standard setters? Yes. What are these standard setters? Do you need to remember word by word? No. Do you need to remember the full form? Yes. Do you need to remember the overall objectives? Yes. Do you need to remember these objectives word by word? No. Okay. Standard setters are FATF, IASB, IASB, ISBA and OECD. In what is the next topic? This is public interest. What is the next topic? That is public interest. In general terms, what is the public interest? The public welfare, right? That is the public interest. Generally, we say that whatever is the public welfare, we call it as public interest. However, when you go for the technical definition, and do you need to remember this definition word by word? I would suggest yes, because this is something that forms core of your auditing profession, that forms core of your regulatory provisions. I would suggest that please remember it word by word if possible. That will help you a lot. Okay. So public interest. What is public interest? The collective well-being of the community. The collective well-being of the community, of people and institutions the professional accountant serves. That is, whatever individuals or organizations we are serving, the collective well-being of each one of them, the collective well-being of each one of them, okay, is known as public interest. That is, if anything suits all of them, if anything impacts all of them in a positive manner, then that would be called as having a public interest. Okay, I hope this is clear. Then that is called as having a public interest. Okay. Now, the accountancy professions public consists of. Generally I will say the public here consists of the stakeholders. Who are stakeholders? People who are either impacted by the company or are interested in it. Maybe somebody is not interested financially, but they are impacted, say the suppliers. Okay. Now, clients. The accountancy profession has the first public as client. Whenever we say public interest, what is the meaning of public over there? So number one is client. Okay. Number two, governments. Because see, these are the two primary people we deal with, the client and the government, the regulatory bodies and the client, right? Then employers and employees, investors and lenders, the business and financial community, and other stakeholders who rely on professional accountants. Do you need to remember these terms? Do you need to remember these people? Definitely not an issue. But via general understanding, can you say that who are the stakeholders for the accountancy profession? The clients, the government, the business people, the other organizations, the stakeholders, right? The investors. So you can remember this, but you do not need to remember word by word. But do you need to remember this word by word? The public interest definition. Do you need to remember this word by word? Yes, you need to remember this word by word. Okay, I hope this is clear. Now let's move forward. The bodies. When we talk about the bodies here, so there's PIOB, there is PCAOB, there is PCAOB, there's UKFRC, and these three are there. Okay. So when I say the bodies, number one is PIOB. Did we discuss it over here also? PIOB? Yes, we discussed it in the IASB. Okay, this is going to be very important for us. So what is PIOB? Okay, so PIOB stands for Public Interest Oversight Board. See my friends, whenever we are spelling anything, so from now onwards, whenever we discuss about PIOB, we will just call it as PIOB, okay? Instead of calling it as Public Interest Oversight Board, we will just call it as PIOB, okay? So what is PIOB? Public Interest Oversight Board. From the name, what it suggests, that it will be looking after the public interest of the people. So oversees IFX auditing and assurance, ethics and education standard setting activities. That is, it oversees. See, IFAC is the supreme body. Over that also there is one body which is PIOB. Okay, So if you have to develop a chart, PIOB comes at top and it oversees the activities of IFAC. Okay, when I say it is overseeing the activity of IFAC, by natural terms it is overseeing the activity of IASB also, then IAASB also, then ISBA also, and that makes it that is something that makes it the supreme organization. Okay, believes it in the public interest. PIOB believes that it is in the public interest. It is in the public interest to do what? To produce international standards that cover all aspects of the audit process, because if any aspect is not covered, then the auditors will be forced to take the professional judgment over there, which may or may not be very accurate in the condition. Okay, to produce high quality standards, that standard setters act independently and are responsive to emerging needs. When I say independently, that is, they should not be biased, that is, they are creating standards for a particular industry but they are ignoring other significant industry. They should not be biased. Okay, then and are responsive to the emerging needs. Okay, then what is the second one? What is the second one? The second one is very simple. To promote compliance with IFAC standards by member bodies. See, what happens is, one of the members of say IFAC is ICI also, the Indian Institute also. Okay, now there has been certain standards which are created by IFAC. Now it needs ground level implementation, say in India. So it helps the local organization, the national organizations to do what? To make that standards apply at the ground level in that particular jurisdiction. That standard setters are open. They believe it is in the public interest that standard setters are open, transparent and responsive to the views and needs of all users. That is, when the exposure draft is created and it is circulated for comments by general public, by stakeholders, by investors, then they make sure, or they say that it is the public interest that we consider the views of everybody. We cannot just consider the views of accountants, we cannot just consider the views of clients, we cannot just consider the views of general public, but what we have to do is we have to consider the views of everybody. Okay, that is important over here. Now PCAOB, what is PCAOB? What is PCAOB? Okay, so Public Company Accounting Oversight Board, PCAOB, Public Company Accounting Oversight Board, PCAOB, Public Company Accounting Oversight Board, PCAOB. What is the difference between this PIOB, Public Interest Oversight Board, and this Public Company Accounting Oversight Board? So this PCAOB you might have heard in US. Okay, if anybody has the US experience over here, they might have already heard about this term PCAOB. Okay, this is created via SOX Act. Okay, Sarbanes-Oxley Act 2002. So created by Sarbanes-Oxley Act 2002 to oversee the auditors of public companies in the US. Okay, so PCAOB is created in what? In US. To see what? To see the activities of the public companies in the US. Okay, but here students makes a lot of mistakes. Number one mistake. Does it oversee the public companies? Answer is big no. Why? Because it oversees the auditors. It oversees the auditors of such companies. It oversees the auditors of such company and not the public company. That is, the first thing that you need to note here is that it is created by Sarbanes-Oxley Act 2002 and it oversees the auditors, not the public companies. It sees the auditors of the public companies, not the public companies. Now, created to protect investors and public interest by promoting informative, fair and independent auditors report. That is, they issue a lot of standards, a lot of guidances on how to make our auditors report more transparent, more communicative, more towards the need of the users of financial statements. Okay, that is the important point here. Now it includes registration of audit firms, that is PCOB. In US, you know, every public accounting firm needs to be registered with PCOB before they can sign the financial statements of public companies. So registration of audit firms. Then setting US account auditing standards. What happens is PCOB has the power in US to set the auditing standards. That is, you have to, if you conduct any audit in US or via US laws, what you have to do is you have to follow the auditing standards issued by PCAOB. Inspection of registered audit firms. Sometimes what happens is some audit firms need certain inspection, say in the form of reviews, say in the form of quality management. So all of that would be conducted by PCAOB. But in what jurisdiction? In the US that you need to understand here and mark it here. Okay, do not get confused by PIOB and PCAOB. PIOB majorly operates in UK, PCAOB majorly operates in US. Okay, then enforcement of SOX and the rules, that is whatever provisions are given by SOX Act 2002 and the rules made thereunder, the enforcement of those rules and act at the ground level is taken care of by PCAOB. I hope this is clear. Now UK FRC. Okay, do you have any questions here? Do you have any questions here? Any questions so far? Please let me know if you have any questions here. Please let me know if you have any questions here. Please let me know if you have any questions here. Yes. Please let me know if you have any questions here. Yes. Do you have any questions here? Please tell me. Do you have any questions? Yes. Yes. Okay. There's no such question. Okay. Okay. Understood. 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 Okay. Understood. Okay. Understood. Understood. Now UK FRC. So Financial Reporting Council. FRC stands for Financial Reporting Council. FRC stands for Financial Reporting Council. So UK's independent audit regulator responsible for promoting high quality corporate governance and reporting. Financial Reporting Council is there. UK's independent audit regulator responsible for promoting high quality corporate governance and reporting. UK FRC is there. Okay, this is going to be important for us because this is specific towards UK. Okay, so in UK FRC takes care that the report of the auditor should have good reporting, high quality standards it must follow for corporate governance as well as reporting. Okay, so it is the audit regulator. Please note it down. It is the audit regulator. Understood this point? Now the FRC. There are certain objectives of FRC. Do you need to remember this word by word? Definitely not. Do you need to remember the keywords? Yes. Okay. So the FRC promotes the UK Corporate Governance Code and the UK Stewardship Code. What is this word stewardship? You might have discussed it in AA, but what is this word stewardship? What is this word stewardship? Managing someone else's property. So there's a separate code for it. Managing someone else's property. Like what happens in the case of directors, no? In the case of companies, what happens is directors are managing the property, but the property actually belongs to the shareholders. So that concept is called as stewardship, when you are engaged to manage the property belonging to somebody else. Okay, so promotes the UK Corporate Governance Code and UK Stewardship Code. The FRC has the responsibility to promote that because it is the regulator of the auditing profession. No, that is why it is very, very important. Okay, now sets the professional standards for corporate reporting, auditing and actuarial practice. What is this actuarial practice? So you might have heard of words like gratuity, right, leave encashment, right, retirement benefits. So all of that is taken care of by, all of that calculations are taken care of generally by actuaries. In case of insurance also, okay, so you will see that generally these calculations are done by actuary. So that is the profession of actuary. Okay, so sets the professional standards for corporate reporting, auditing and actuarial practice. Now represents UK interest in international standard setting. That is, whenever there is a committee meeting that goes around worldwide, then FRC is the organization that represents UK in the international setting bodies. That what is the role of UK, what should be the representation of UK bodies into the international standard setting. Okay, then oversees the regulatory activities of the actuarial and accountancy professional bodies. Oversees the regulatory activities of the actuarial and accountancy professional bodies. That is, it does not perform any regulation, but whatever organizations are there, for example, in case of auditing there is IAASB, right? In case of IFRS standard there is IAASB. Okay, there might be some other organization for the actuarial service. So it oversees that whether they are performing their activities appropriately or not. So it just oversees. Okay, oversees the regulatory activities. But when I say oversees, it means not perform, just oversee and grant suggestions if required. Okay, now operates independent disciplinary arrangements for public interest cases involving accountants, auditors and actuaries. That is, can it take Independent disciplinary actions, yes. Can it take disciplinary actions? Can it take disciplinary actions? Yes, it can take disciplinary action, because it is very important for us to understand that this organization is not just to oversee. This has certain powers also. This organization FRC has certain powers also. What is that power? Then they can also have disciplinary actions against whom? Against accountants. When I say accountants, it means the certified accountants. Okay, certified accountants. Then against auditors who are auditing the companies, who are auditing the companies, who are auditing the companies. And when I say actuaries, so it means the profession of that calculation that we discussed about. Okay, although actuaries are not very much important for our syllabus, so that is not very important for us to study over here. Okay, I hope this is clear. Any questions so far? Please let me know in the chat box. Any questions so far? Any questions so far? Please let me know in the chat box. Any questions so far? Please let me know in the chat box. Yes. Any questions so far? Please let me know in the chat box. I'm waiting for another 1 minute, because I think there might be a lag of 10 to 12 seconds, right? Between when I speak and when you listen, and when you speak, I listen. So I'm waiting for another few seconds. Please let me know if there's anything that you need to discuss. Any questions regarding notes, regarding discussions, regarding question banks, regarding the discussion that we have done so far, anything. Please let me know. Any questions? Okay, no such questions, no worries. Now, impact of corporate governance. Corporate governance is what? System by which an entity is directed and controlled, right? System by which an entity is directed and controlled. System by which an entity or organization is directed and controlled. System by which an entity is directed and controlled. Okay, on audit and assurance practices. Hello. Yes, on audit and assurance practices. So the system by which organizations are directed and controlled, that is known as corporate governance. When I say directed and controlled, what do I mean by it? I mean that the systems through which an organization manages its supervision activities, what activities it wants to achieve, what objectives it wants to achieve, what objectives they want to achieve, and what activities they want to perform, that is known as, and the monitoring policies, that is known as corporate governance. You might have heard that a company is managed by multiple directors, but all of those directors also have their separate responsibilities as well as a collective responsibility towards the achievement of objectives of an organization. So that is given by corporate governance. Okay, will we have a detailed discussion about it? Yes. Okay, we will have a lot of discussion about it. Okay. Yes, definitely. Please, once you start reading more, of these concepts, once you start using the keywords in your answers, definitely your answers and your overall collective English answers are going to be improved. Okay. Now, why corporate governance is important? Before reading it, can you tell me, why do you think corporate governance is important? Because, see, the owners are the shareholders. Shareholders have given their company for the purpose of management to directors, and directors have the obligation to manage it in the best public interest as well as the best interest of the shareholders as well, right? Now, when I say they have to manage it in the best interest of the shareholders, sometimes it might happen that the director's view and the shareholders' view are not matching, right? But when we say corporate governance policies are there, and corporate governance policies play a major and important role over here, so directors can say that we have followed the guidances given by corporate governance policies, and what we are doing is in the best interest of the shareholders. So that helps resolve a lot of issues via giving more transparency, giving more accountability, and giving more feeling of stewardship. So how the organization's decision makers act. Why corporate governance is important? Because it sets the tone for how the decision makers of the organizations are supposed to act. then how they can or should be monitored. That is how the decision makers, that is generally the directors, how they need to be monitored, because they are answerable at each AGM towards every decision that they have taken. How they can be held to account for their decisions and actions via what? Accountability. Via, there is a separate word in your AA syllabus which is known as accountability, which is stewardship, which is agency. So once you understand that, you will realize that directors are held accountable. They are supposed to have a feeling of stewardship, and they are the agents of the company as well as the shareholders. Now, there's one thing in corporate governance which is comply or explain versus rules based. Comply or explain versus rules based. When I say comply or explain, that is either you comply with the provisions that are given, okay, which are set under the corporate governance guidances. Just in case if you are not complying, then you know what you need to do. You need to explain it in detail. You need to explain it in detail. So regulatory authorities issues standards. Directors of listed companies, what? Listed companies, not all companies. Directors of listed companies are expected to comply and disclose in financial statements. Non-compliance, if there has been a non-compliance, must be clearly disclosed and explained. See, which means if you comply, no explanation is required. If you comply, no explanation is required. However, if you do not comply, then it needs to be explained. Non-compliance, then explanation is required. Non-compliance, explanation is required. Explanation is required. I hope this is clear. Okay. So there's a query, sir, I am in class 11, so should I start from FIA route or after 12th? I am confused about choosing the right time. So my friend, what I will suggest you is that there are certain videos available on this channel, okay, which are related to the ACC guidance. I think you should watch those videos so that you get the complete guidance, okay. This is a detailed question. It will not be right to give you one route directly. We have to evaluate your particular case. So what you should do is you should watch those videos. If you have further questions, there would be a number available on the chat box or the description box, or what you can do is you can directly reach out to us via this channel or my Instagram or YouTube account, which is ACCA with CA Supreet Agrawal, and we will discuss in detail. Okay. Now rules based approach, because this requires a lot of discussion. I'll not be able to answer it in one go, so we'll have a good discussion about it, not an issue from my end. Okay, now rules based, so required disclosure in annual report. Rules based, required disclosure in annual report. So importance of balanced board is given over here. When there is rules based approach, that is you need to follow it, then importance of balanced board is mentioned over there, that what is the requirement of having executive directors, non-executive directors, managing director, and every kind of director and attributes in the board. Okay, then need for NEDs. When I say NEDs, what do I mean by it? NEDs stands for non-executive directors. NEDs stands for what? Non-executive directors. NEDs stands for what? Non-executive directors. Now when I say non-executive directors, what do I mean by it? Non-executive directors are the directors which do not take part in the active management of the company on a routine basis. Okay. Now need for robust procedures for appointing directors. See, what happens is in corporate governance, one of the key responsibility person is the director. If the appointment of directors or the nomination of directors or the composition of directors is delayed, then it becomes a big issue in the form of corporate governance, because all of your committees will not be able to work to the best efficient manner. So that is why there are needs for robust procedures in appointing directors. Do you need to mug these up? Do you need to mug these up? No. But what you need to understand, that in case of non-compliances under the compliance or explain mechanism, what you should do is, if you follow, you should disclose. If you don't follow, you have to explain also. That is something that you need to remember. Okay. Then merits of AC. What is AC? AC, air conditioner? No. AC here means audit committee. Merits of audit committee. We will be discussing it right after this, when we will be going towards the audit committee's discussion. Okay. Then need to monitor effectiveness of IC. Need to monitor effectiveness of IC. When I say need to monitor effectiveness of IC, what is IC here? What is IC? What is IC? IC means internal controls. Need to manage what? Internal controls. Okay, I hope this is clear. I hope this is clear. Now, once we are sorted for all of this, okay, what we need to do is we need to understand certain important principles of UK code. When I say UK code, what do I mean by this? When I say UK code, what do I mean by this? So first of all, what we are discussing is the main principles of the UK code. Okay, that is something that we are discussing over here. First of all, we should have that clarity. But before that, I would like to ask all of you, do you have any questions that I could answer here? Any questions? Any questions that I could answer here? Please let me know if there are any questions that I could answer here. Yes, please tell me. Yes, any question that I could answer? Yes. Okay, I hope there are no questions and everything is clear. That's amazing. That's amazing. So UK code main principles. UK code main principles. Okay. So UK corporate governance code. When I say code, what it means? UK corporate governance code is set by the FRC. FRC as in Financial Reporting Council. We have already discussed. It applies only to listed companies. Only to listed companies. It applies only to listed companies on the London Stock Exchange. But can other companies also apply it? Yes, on a voluntary basis. But can be used by any entity on the basis for as the basis for best practice. That is important to understand that it could be applied by any entity. However, it is mandatory for companies that are listed in London Stock Exchange. Okay, only to listed companies. Only to listed companies or what? Only to listed companies of what? Only to listed companies of London Stock Exchange. Okay, now it takes comply or explain approach. Compliance or explain approach as in, if you comply, you just need to disclose, but if you do not comply, what you need to do is you need to explain the reasons of non-compliance as well. You cannot just say that we have not complied. You have to explain the reasons also why you have not complied with it. Okay, now it has five elements, okay, 5 components. Although all of these components needs detailed discussion, but we will not be doing it today. We will be doing it in our upcoming classes, so that it does not get very monotonous for you and the content is very well covered also. But what I have done is I have mentioned these points over here so that we can discuss about it, but all of these points needs a lot of discussion, and when we will do that in our upcoming classes. So board leadership, what when I say the components of board leadership and company purpose, that is one of the main criteria, one of the main principles of the code is board leadership and company purpose. That is, company should have that kind of a leadership, or the chairman of the company, the chair of the company should be such that helps the company to achieve its purpose. However, there are multiple points to it that we will be discussing in detail in our upcoming classes. Division of responsibility, there should be a process of how responsibilities would be distributed among different people of the board. For example, there could be certain responsibilities which can only be given to, say, audit committee. There could be certain responsibilities which can be given to, say, nomination remuneration committee. There could be certain responsibilities that can be given just to risk management committee. So we will be discussing about all of them in detail here. Okay, now composition, succession and evaluation. When I say composition, succession and evaluation, what do I mean by it? Composition as in the composition of the committee and the board. That is, there is one particular committee that we will be discussing about later, which is NRC, Nomination Remuneration Committee, that looks after, the board should have that committee, and that looks after the nomination of the relevant people at the relevant places. That is, every committee should have certain directors. For example, in case of audit committee, we will discuss that there should be minimum 3 directors. All of that should be independent as well as non-executive. So that is the responsibility of that committee, that make sure that audit committee has 3 independent non-executive directors. Okay, succession as in how the succession of the directors would happen. Say rotation is happening, say one director is leaving, how the succession would happen of the roles and responsibilities and the overall evaluation. Then when I say evaluation, it means measuring the performance of each director, each person of the board against certain criteria to evaluate that who needs what responsibilities in what manner. Okay, audit, risk and internal control. How the process of audit, risk and internal control. Risk means risk management. How the process of audit, both external and internal, risk management and internal controls mechanism, evaluation and distribution of internal control is managed within an organization. All of these points will have certain detailed requirements, certain detailed discussion that we will be doing in the upcoming classes. Now when I say remuneration, what do I mean? Whether everybody in the board is appropriately remunerated or not as per the given laws and regulations. Given laws and regulations, generally remuneration is decided between the directors and the company, right? No, there are certain laws and regulations also which tells us that what kind of remuneration could be given to a particular director or the board in total. So we have to look over that also. Any questions so far? Then we'll go to the discussion of audit committee, and this is going to be a core discussion, and once we complete it, the chapter will get completed. Yes, any discussion before we start with audit committee? I'll tell you that what you can do is, there is a number that is given on the description of this video. You can directly call on that number and you can have a detailed discussion about it, okay? Or you can connect with me on Instagram or LinkedIn and we can have a detailed discussion about it, not an issue from my end. Yes. Any other questions, any other discussion points that you would like to do? Any other discussion, any other points that you would like to do here? Yes. Any other discussion points? Yes. Okay. My Instagram ID is ACCA with CA Supreet Agrawal. Okay. You can connect with me over there. Okay. Now let's go to the discussion of audit committee. Now, before we start the official discussion of audit committee, I would like to have a quick discussion about explaining why this audit committee is required and how it is formed. So imagine a situation that this is the board table. The chairman is sitting over here. There are 3 people sitting over here. Then there are 3 people sitting over here. Then there are 3 people sitting over here. Then there are 3 people sitting over here. Now, if we have to reach to a decision, okay, and if we say that we have to take the approval from all of them, then it might take a lot of time. It might result into the process where every decision will take a lot of time. The decision making would be delayed. So what would be a better option is that we give certain responsibilities to these 3 people, we give certain responsibilities to these 3 people, we give certain responsibilities to these 3 people, and then certain responsibilities to these 3 people, right? So once such responsibility is given to these 3 people, which is in the form of audit committee, Now to have a general explanation, generally these people are NEDs as in non-executive directors. These people are also independent. That is, they are not the full-time employees of the company, they are not the consultants of the company, they are not the internal people, officer of the company, they are not the managers of the company. These people are independent of the company. Then how do they get the access to the board? So there's a particular requirement that you have to have composition of certain non-executive directors in your board. Okay. So, and audit committee have all three independent non-executive directors. Independent non-executive directors should be there. All 3 directors should be independent as well as non-executive. What is their responsibility? They look after the financial reporting process. They look out for the appointment of auditors, both internal, external, secretarial, all types of auditors. Okay. They review the work of the auditor. They see if the scope and the responsibilities of the auditors are being fulfilled appropriately or not, whether there is particular help or facilitation which is given to the auditors or not, whether auditors are facing any trouble, what is the final report of the auditor, is it backed by logics, is it backed by standards or not. So everything is overviewed and reviewed by them. Okay. They also recommend that what auditors should be appointed by the board. So ultimate appointment would be done by board and shareholders via approval of shareholders. However, they recommend the board that what to recommend to the shareholders. Okay. So that becomes the overall understanding of audit committee. Now let's go for the particular text and start understanding about it. So it is mandatory for a listed company. Important point, yes, it is mandatory for a listed company. Best practice for unlisted and other entities, that is other unlisted and public entities could also have it as a best practice. Through the audit committee, external auditors are responsible and report to the shareholders, not the executive management. That is, we say no, that in case of external auditors reports to the shareholders. But who is the party who helps them do that? Audit committee is the party that helps them report directly to the shareholders. Now, the audit committee enhances the external. Audit committee does what? Audit committee enhances the external auditor's independence and provides greater independence for the internal auditor. The audit committee enhances the external auditor's independence via what? Via allowing them, via reviewing their work, via allowing them to be independent in their approach, via making them separate from the internal officers and managers of the company, by reviewing whether they are actually independent or not, or are there any threats that we are going to discuss in ethics chapter. and provides greater independence for the internal auditor. Greater independence for the internal auditor in what sense? Because they review the work of internal auditor also, not just external auditor, they review the work of internal auditors also. Okay. Now composition as in what it is made of. So at least 3 independent non-executive directors, 2 for a small company. That is, if it is a small company, what is the definition of small company? Not covered in our syllabus. But if it is a small company, then minimum 2 directors should be there. If it is a normal company, then there should be at least 3 independent non-executive directors. At least 1 member must have recent and relevant financial experience. When I say recent and relevant financial experience, what do I mean by it? When I say recent and relevant financial experience, what do I mean by it? That is, every member should not be that. At least 1 member should have some financial experience recent. Okay. Then as a whole, the committee must have competence relevant to the sector in which it operates. That is, number 1, can committee have certain non-financial people also? Yes. The committee could have non-financial people also? Yes. But those members should have particular knowledge of the industry. That is, all members should have knowledge of the industry, and at least 1 member should have relevant and recent financial experience. Okay. And of course, it would be in that sector only, since all members are required to have the competence related to the sector in which the company operates. Now, what are the main roles and responsibilities? What are the main roles and responsibilities of this particular company, of this particular audit committee? Okay. Now, monitoring the integrity of FS. I told you know that it enhances the transparency and integrity of the FS. What is FS? Financial statement. So, monitoring the integrity of the FS of the company and any related formal announcements. So, whatever formal announcements are there related to the FS. Say, if the company is announcing the annual report, so will audit committee look after it and say that, you know, in this particular case, this is matching with our financials? Will they review it? Yes. Provide advice where requested by the board. Where requested by the board, that is, they cannot go and sumo to provide their advice. They have to provide their advice when it is requested by the board on whether annual report and accounts taken as a whole is fair, balanced and understandable and provides necessary information. That is, when we are issuing any annual report or any other formal communication, whether it is fair as in appropriate in the given scenarios, and whether it provides the information that is expected of that report in a transparent manner or not. Then reviewing the company's risk management and internal control framework. Reviewing, not applying. Okay. Reviewing, providing advice, monitoring. That is, they are not doing the work. They are either monitoring, they are either recommending or providing advice, or they are reviewing. Okay. Unless separate. So they review the risk management and internal controls also, unless separate RM committee or board addresses it. What is RM? RM stands for risk management committee. This is also required in listed companies. Other companies might not have it. So if there is a risk management committee, then they will look after those processes of risk management and internal controls. If not, then this committee, audit committee, will look after it, or board. Sometimes board also takes charge of that internal control and audit, internal control and risk management. Okay. Now, monitoring and reviewing the effectiveness of the company's internal audit function. Okay. Monitoring and reviewing the effectiveness of the company's internal audit function. When I say monitoring and reviewing what effectiveness of internal audit, so please remember that this point is talking about what? Internal control. This point is talking about what? Internal control. Whereas this point is talking about what? Internal audit. Please do not get confused. A lot of students gets confused over it. Okay. And then reporting to the board on how it has discharged its responsibility. It means what? It means what here? The audit committee. Okay. It means what? The audit committee. How audit committee has discharged its responsibility? They have to give representation in front of the board. They have to report to the board that how it has discharged its responsibility. I hope this is clear. Any questions so far? Please tell me. Any questions so far? Please tell me. Yes, please tell me if there are any questions so far. Yes, please tell me if there are any questions so far. Any questions so far? Please tell me. Or this is good to go. Now, my friends, before moving further, I would like to tell you that you have to read everything once from ACCA Study Hub. Read everything once more. Once from ACCA Study Hub. Because there might be a lot of other points that you might find little difficult to interpret. Although I have covered everything over here, but just in case, if you read anything and you need to figure out something, please feel free to tell me. Okay, as a best practice, I would suggest that you go and read it once. Okay, although these notes have everything, but for example, when we come to key points from FRC guidance on audit committees, there are a lot of points that we have already studied about the audit committee. Those are repeated over here. So what I have done is I have mentioned the new points over here, not the whole points but the new points over here. Similarly, in case of key points from audit committees and the external audit minimum standard, here also there were a lot of repeated points from the above two guidances. So what I have done is I have mentioned the new points over here, but once you go over this, you will realize that all the points we have understood, but what needs to be mentioned over there other than these specific pointers, you will get a good understanding about it once you read it. Okay, so that way you should always read it once. Now key points from FRC guidance on audit committees. So the company should provide an induction program for new audit committee members. Can they provide for existing audit committee members also? Yes, if there is a requirement. The committee should at least annually, that is once every year at least, okay, meet the external and internal auditors without management. They should meet the external and internal auditors without management, and they should evaluate their viewpoints, their evaluations, their work. Okay. The audit committee should be provided with sufficient resources to undertake its duties. For example, if they need access to certain people, certain documents, they should be able to do that. The committee is responsible for overseeing the company's relation with the external auditor via what? Via continuous discussions. That is, whether the external auditors discharging their responsibilities as per the appropriate measures or not, what are the reports of the external auditors, whether they are considering the relevant statutes or not, everything would be reviewed by the audit committee. The board has ultimate responsibility for an organization's risk management and internal control system, but the board may delegate to the audit committee some functions to assist the board in meeting this responsibility. That is, ultimate responsibility with board. However, audit committee might be delegated, not delegate, might be delegated. That is, board may delegate certain responsibilities to audit committee so that the overall objectives, the overall functioning related to the risk management and internal controls could be achieved. So although internal control and risk management, we have discussed that audit committee sometimes reviews the internal control and risk management policies also, unless there is a separate risk management committee or the board takes over it. So the board has the ultimate responsibility towards it, but can board give that responsibility or delegate some part of that responsibility to audit committee? Yes, but ultimate responsibility would be ultimately of the board only. Now, the audit committee should have primary responsibility for the appointment of the auditor. When I say appointment, primary responsibility, so it would be for recommendation. Okay, audit committee does not appoint the auditor. Audit committee only recommends the appointment of the auditor. What if board wants to go with some other auditor? Can they do so? Yes, but they have to disclose in their reports that why they have not selected the auditors given or recommended by the audit committee and they are going with another auditor. Okay, so that is the power of audit committee. Okay, now the audit committee should approve the terms of the engagement and remuneration to be paid to the external auditor. What should approve? Do you need to remember these points word by word? No. But what you should do is you should be able to apply whenever there is a case study. So if there is a case study which says that audit committee that the remuneration is fixed by the board without discussing with the audit committee, will you say yes, it is appropriate? No. You will have to say that the remuneration and the terms and conditions that needs to be done by the auditors, the external auditors or the internal auditors, needs to be approved by the audit committee first. So in that case, board has not done the right thing. Okay. Now the committee should assess the independence and objectivity of the external auditor annually. The committee should assess the independence and objectivity of the external auditor annually. The committee should assess the independence, whether the internal and external auditors are independent or not. Does internal auditor needs to be independent? Not necessarily. They can be independent, yes, but external auditor needs to be independent. Okay. Here I'll put up a question. Why not internal? Why not internal auditors? Also, because they can be, or let us write it this way, because they need not be independent. Can they be independent? Yes. Do they need to be independent? No. Okay. At the start of each annual audit cycle, the audit committee should ensure that appropriate plans are in place for the audit. Audit committee should ensure what? That appropriate planning has been done by the auditors over here. Okay, so I hope this is clear. Now, key points from audit committees in the external audit, that is the minimum standard. This is the minimum standard given in the UK. So please try to understand it. The standard is applicable to the largest UK listed companies, that is included in FTSE 350 index. Whatever companies are included in FTSE 350 index, exactly applicable on those companies. Okay, other companies may wish to apply its provision, that is, there is no restriction that others cannot apply it. Others can also apply it as a best practice. Okay, now what is given by this guidance? The mandatory standards, the minimum standard, managing non-audit relationships with audit firms. Why do they need to do so? See, what happens is, audit is a process where there is rotation. So continuously you might require tendering. What is tendering? You might apply invitations, or you might invite invitations from multiple audit firms for the purpose of rotation or for the purpose of changing in the next year. So to have that relationship with other auditors, it is recommended over here that you should manage non-audit relationship. That is, whatever work is there which is not related to audit, you should get other firms involved into it, so that tomorrow if there is a requirement of changing the auditors, you already have relationship with certain firms. They already have certain understanding of your entity, so the risk might be reduced. Now, conducting the tender process and making recommendations to the board. Conducting the tender process as in what? Inviting offers. Tender process as in what? Inviting offers. Tender process as in what? Inviting offers. Okay, from firms. And making recommendations to the board. Only recommendations, not hiring, the recommendations. Okay, not hiring, only recommendations. Then review and monitor the content of the external auditor's management letter. What is management letter? This is given under ISA 500 series. Okay, ISA 500 series, we will discuss about what are the contents of the written management letter, written representation letter. But management letter is something where management discusses. I am just telling you in brief. Management discloses and signs that we have given all information to the auditors. Whatever information was available to us, we have given that. We have given all the evidences to the auditors. There is nothing in our knowledge that we have not conveyed to the auditors which might be relevant for the financial reporting. So all of that is written and signed. So they review and they monitor that those content is appropriate or not, whether we have covered all the contents required for the purpose of audit or not. So this becomes a little important. Now, benefits and limitations, these are a little extra points, but please try to understand it from the point of view that if you are required to write it, it would be only from the point of view of that do you know the generalized benefit of having audit committee or not. Okay, so one benefit is it provides effective and informed oversight in helping to ensure market, public and stakeholder confidence in high quality financial reporting. That is, it enhances the stakeholder confidence. Can we write it? Yes. Do we need to write in exact words? No. Enable the board to delegate a thorough and detailed review of audit matters. Enable the board to delegate a thorough and detailed review of audit matters to what? To the audit committee. So it leaves the board with more time for the overall management, because one part of the management, which is audit and assurance, is taken care of by the audit committee. Then enable NEDs as in non-executive directors, to contribute independent judgment on issues of critical importance in running the business. Generally, non-executive directors might not get their say into the board. However, by delegating those responsibility to audit committee, which is formed out of non-executive directors only, you are giving significant representation to non-executive directors in your board, which will enhance the transparency and accountability in the minds of others as well. Offer, or the overall board, offer the external and internal auditors a direct formal link with non-executive directors, because a lot of times the executive directors might know certain things that they might not be able to tell to the auditors. But if auditors have direct access to non-executive directors, they will be more transparent, they will be more confident that they are talking to an independent party, and their decisions, their conclusions or their mechanisms will be taken in the independent and unbiased manner. Now, limitations. See, whenever we talk about limitations, the cost may be there, right? So may be considered as an unnecessary legal or regulatory burden placed upon the board. That is, it is very difficult to find those people who are independent, who wants to be part of the audit committee, and who are non-executive also, correct? So that makes it difficult and a little burden on the board. Plus it is mandatory to have in listed companies, so you cannot even say that we are not finding it, so we are letting it go. No, you have to find it. So the required time and expertise of non-executive directors makes finding suitable candidates harder. We have already discussed it. Members may feel that the responsibilities and risk are too high than the reward. See, they are not dependent, they are not getting any direct remuneration or profit sharing from the company, yet their risks are so high that they have to review the public reports, they have to review the public announcements, they might not be aware about certain cases, and they have to review that they have reviewed the public announcement, they have to review the financial reports, they have to review the work of the auditors. So sometimes they might not also be aware about the full facts of the organization, right? So that makes their work very, very risky. However, there are no such rewards to it. Now, issues with the balance of cost benefit. Sometimes it might involve a lot of cost not just in the form of finance, but a lot of process also, and benefit might not be so much, and only effective when they can operate as the governance courts intend. That is, this is very important point, that is, audit committee would only be effective when they have been given the relevant authorities, powers, responsibilities, obligation as intended by these courts or the regulatory guidances that are there. If they are not being given the relevant power or authority or obligation, then it might not be able to achieve the desired objectives. Do you need to remember these limitations and benefits word by word? Definitely not. With this, we have completed chapter number 1 of your AAA syllabus. So congratulations to all of you. Here we will just be discussing about one portion of it later on, which would be these 5 components, so that you get the detailed understanding of it. Today we have already discussed chapter number 1 in so much detail that if we discuss these points in detail, it will become a little monotonous session for us. So for today, what we will be doing is we will be taking a 10 minutes break again, and then we will be going for chapter number 2, that is money laundering. And what we are going to do, are we going to complete it? No. What we are going to do, we are going to develop a lot of basis of that chapter in such a manner that when we discuss money laundering again, we will be in a position to discuss it in detail, and we will be having all the basics cleared. Okay, so let's take a 10 minutes break. It's 12. Let's come back by 12:10, and then we will be starting with chapter number 2 of your AAA syllabus, which is money laundering. Okay, so thank you so much. Okay. So now we are back with chapter number 2, that is money laundering. That is money laundering. Okay. So please confirm on the chat box. Please confirm on the chat box. Please confirm in the chat box if I'm audible and visible clearly. Yes. Okay. So I hope I'm audible and visible clearly. Now, my friends, we are going towards one of the most interesting topics of your ACCA AAA syllabus, which is chapter number 2, money laundering. Okay. Whenever I talk about money laundering, generally people consider that money laundering is just the conversion of illegitimate money, or the common word that they use is conversion of black money into the white money. What is your say about it? What is your say about it? What do you think? What do you say about it? What do you say about it? Tell me. What do you say about it? Generally people think that black money, that conversion of black money into the white money, conversion of black money into the white money is called as money laundering. Is that so? What do you think so? What do you think so? Tell me, what do you think so? What do you think so? Tell me, what do you think so? What do you think so? Let me know in the chat box, what do you think so? Yes. What do you think so? Okay. So I'm sure that a lot of people will answer that conversion of black money to white money is money laundering. However, money laundering has a very big scope as far as that is concerned. Okay, it's not just conversion of black money to white money, but but there are multiple other aspects to the money laundering. Okay, so once we complete this chapter, you will realize that money laundering is such a big concept and we only knew about one or two parts of it. Okay. So what we are going to do is we are going to learn about money laundering here. Are we going to complete it fully today? No. We are going to learn some of the basic concepts, some of the core concepts of money laundering, and then in the next classes we will be completing it also. Now definition. What happens is definition. Definitions are really important. When I say money laundering, the definition becomes really important. That is, we need to do what? We need to understand certain definitions. So what is the definition of money laundering? Concealment of. Now what is the meaning of concealment here? What is the meaning of concealment? Concealment as in hiding. Concealment of true origin. True origin as in what? Source. Okay. Original source. Okay. And ownership. Ownership as in property. Legal ownership of criminal proceedings. Criminal proceedings, any proceedings obtained, any money originated out of illegal activities. Okay, that is the interpretation that we should know when we are discussing about money laundering. And creating a legitimate cover. Legitimate cover as in legal cover. Creating a legal cover. Legal cover. So it's not just conversion, it's hiding the true origin also, it's hiding the ownership also. Okay, creating legitimate cover for the sources of income. Okay, it specifically includes possession as in custody, that is, even if it is not yours, it is in your possession, it is in your custody. For example, my office has that amount. Dealing, that is trading or transactions. Procuring, that is securing. Procuring as in securing. When I say securing, it means from any kind you are calling it to yourself. Securing. Okay. So what is the definition of money laundering? Concealment of true origin. Concealment of true origin and ownership of criminal proceedings and creating a legitimate cover for the sources of income. It includes specifically possession, dealing and procuring of that particular money. I hope this is clear. I hope this is clear. Yes, please let me know in the chat box if this is clear. Please let me know in the chat box if this is clear. Please let me know in the chat box if this is clear. Yes. Okay. Now, principal offenses. Generally people think that only the conversion is the offense. Offense as in the criminal activity for which there are penal actions. But that is not true. A lot of times there are multiple other things that gives rise to the principal offenses related to the money laundering. In fact, there are other offenses also. We are just talking about one of it. Okay. So it is laundering. When I say laundering as in converting. converting. Laundering as in converting into clean money, converting into legitimate or clean money, legitimate or clean money. Okay, then failure to report suspicion, just in case, and it is not failure to report the incidence of money laundering, failure to report suspicion. What is suspicion we'll discuss, but just in case, if you suspect, that is you do not have any proof or anything, but just you suspect that some person has done the money laundering or has been involved in any activity related to money laundering, and you have failed to report it to the relevant authorities, then also you will be considered as conducting a principal offense, not just any offense, principal offense under the money laundering provisions. This is very, very important for us to understand. Money laundering has such a big base, right? Then tipping off. Now this becomes really important. Tipping off as in, if Mr. A is there, okay, Mr. A is there, Mr. B is there, okay, Mr. B is subject to an investigation, okay, subject to an investigation by department, subject to an investigation by relevant department, okay. Now Mr. A got to know about it, and Mr. A told Mr. B that there is an investigation against you that is going to be launched. You should hide your resources as of now only. Okay, this is called as tipping off. When you are making somebody against whom the investigation is going to happen, you are making them aware about the investigation. That is called as tipping off in simple terms. Okay, that is in Hindi we call it as pusu, right? So that is tipping off. Okay, laundering, failure to report suspicion, and tipping off. Okay, now stages of laundering. When I say stages of laundering, what do I mean by it? Stages of laundering, what do I mean by it? So there are 3 stages of laundering. That is, whenever there is a laundering, it is done into 3 stages. Okay, we'll have to discuss about each of these stages in detail, but for today we will not discuss each one of them in very, very detail. We will understand it, but we'll read the technical text in the upcoming lectures. Okay, now what are these 3 stages? So the first stage is placement, second stage is layering, and third stage is integration. When I say placement as in when the money first enters the financial system, layering, when it is converted into multiple sources, so as to make it difficult to identify the original source. Okay, and third one is integration, when it comes back to the economy in the form of legitimate, in the form of legal money. Okay, let me explain this with the help of an example. You know, there was a movie once. In that movie, what happened was, Mr. A got certain money. Okay, this was purely black money, this was purely legitimate money. Okay, Mr. A did was, Mr. A obtained that money, Mr. A took that money to some other country, okay, foreign country. Okay, Mr. A did what? He distributed this money in that foreign country to multiple people, say B, C, D, and multiple others. Okay, then he asked that deposit all of this money into A Limited in India, okay, in the form of, say, IPO. So A Limited has issued the IPO, and that money came back in the form of legitimate money. Now the only concern here was to take this money to foreign country. Once it reaches the foreign country, then what has happened? They have converted into multiple layers, say from B, C, D, then from again to other people, and then they called all of that money back in the amount of small portions, and then they called it as legitimate money, that is in the form of investment. So similar thing has happened here. Placement as in when that person first received the money, that is first introduction into the financial system. When the money is first introduced into the financial system, it is called as placement. When the money is first introduced into the financial system, it is called as placement. When it is converted into multiple layers, okay, so as to hide the origin source, so that is known as layering, which is concealing the origin via series of complex financial transactions. So Mr. A has given it to Mr. B, Mr. B has given it to Mr. C, Mr. C has given it to Mr. D, and so on. They have made it possible. Okay, now integration. So reintroduction into the financial system in the form of clean money. Integration and then reintroduction, when those people have reinvested that money into the company, which is A Limited in this case, then that would be called as integration, because now nobody can question it. Now it has been introduced in the form of a clean money. Okay, so placement, layering, integration. Placement, layering, integration. These are the three stages of money laundering. I hope this is clear. Yes. Now move forward. Failure to report suspicion, failure to report suspicion, failure to report suspicion, failure to report suspicion. When I say failure to report suspicion, we discussed, no, it is one of the principal offenses, failure to report suspicion. So, legally obligated to report suspicion to Financial Intelligence Unit. Whenever you suspect that there has been a transaction, there has been a person who is involved into the money laundering, what we need to do? We need to ultimately report it to the Financial Intelligence Unit, which is called as FIU. We have to report it to that particular institution. If we do not report, then we will also be considered as conducting a principal offense under the money laundering offenses. Okay. Now, suspicion report should include suspicion report. When you are reporting, those suspicion report should not just be like that you suspect and they launch the investigation. No, your suspicion report should include certain things. One of those things is reporting business full name. That is, what is the full name of the business? Identification of suspicious party, that under that business also who is conducting the suspicious transaction. Suspicious transaction details, that is, when you suspect that certain transaction has happened, what are the details of it, from which country it is originated, from which person it is originated, in which currency it is happening, and what are the other details of the transaction, maybe the transaction IDs and all if you have available. Then suspicious property details, if it is not for a transaction but a property, say movable property or any other movable property also, then you have to show the details. That is, it is very simple. You need to report the business, you need to report the person, you need to report the transaction or the property details. I hope this is clear. Yes. Now, tipping off. When I say tipping off, what do I mean? When I say tipping off, what do I mean? When I say tipping off, what do I mean by it? So, tipping off means disclosing about an ongoing or potential investigation. Disclosing about an ongoing or potential investigation. That is, if there is going to be an ongoing investigation, or if there is going to be an investigation in future, and you are letting anybody else know about it, especially the party on whose company there is going to be an investigation, then you will be said to have committed the offense of tipping off. Tipping off is very, very important for all of us to understand, because this is something that we generally end up doing, right? So that is why this is very, very important. Okay, so what are three offenses? Laundering, failure to report suspicion, and tipping off. Did you discuss about laundering? Yes. Did we discuss about laundering? Yes. There are three stages: placement, integration, and layering. Placement, layering, integration. Placement, layering, integration. Failure to report suspicion, did we discuss? Yes. Did we discuss about tipping off? Yes. Now let's move forward. Risk associated with money laundering. We will be completing in a matter of 5 to 10 minutes. Okay. Risk associated with money laundering. See, what happens is, once you are into the stage where you have done the money laundering, once you are into the stage where you have committed an offense of money laundering. Now, what is supposed to happen? I'll tell you. You might get fines and penalties. You might get fines and penalties. When I say fines and penalties, what do I mean by it? You might get fines and penalties. When I say fines and penalties, what do I mean by it? That is, there might be certain parameters that might be fixed, that if you have done a money laundering transaction of say over 1 crore, what might be the penalty, what might be the fines. You might go to court. Court might give you certain damages, right? Now, loss of reputation. Once you are caught up into the transaction of money laundering, definitely you will lose certain reputation, that this you do not need to deal with this person, because this person usually has the reputation that this person enters into the money laundering transaction. People, for example, if tomorrow I am convicted of money laundering offenses, do you think people will try to take my classes? Maybe not, because they might be fearing that if I pay to this person is involved into money laundering, and our money would also be caught up there, and we might also be traced back as a money launderer in the eyes of law. So there would be loss of reputation. And finally, imprisonment. If it is proved that you have done that transaction, then there could be imprisonment also, and generally there would be imprisonment also. Money laundering is such a bad offense. Okay, so risk associated with money laundering, fines and penalties are there, loss of reputation are there, and imprisonment is there. Why this is considered as one of the biggest risks to caught up in money laundering? Because generally multiple nations are involved, and wherever there are multiple nations, you will be bound by the legal formalities of both the nations, and it might create a lot of trouble for you. Okay, now what are the general defenses? General defenses means what generally people say about this money laundering offenses, as in what do they generally say, that we are not money launderer because of this reason. So they say intention to report existed, but there was a reasonable excuse not to report. That is, they wanted to report. For example, they are being caught up in the suspicion, and that is, they did not report the suspicious transaction. So they might come up with a defense and say that we wanted to report, sir, please believe us, we wanted to report. However, the only concern is that we were unable to report for some reason. Maybe we called but the person didn't pick up, maybe we visited the office but it was closed. Maybe we wanted to communicate but we were unable to because of some fear, some intimidation, right? So this could be first defense. Second defense could be responsible party acted in good faith. That is, the person said that I believe that this person has been entering into a transaction in good manners only, in good faith only. That is, there's no reason to believe that this person would do the money laundering in such a case. I did not have any reason to believe that. So I did not believe that it is a money laundering, and since I did not believe it was a money laundering, I did not report it. And report has already been submitted to MLRO. Generally, they might also come and say that, you know, we have already submitted a report to MLRO. Now, what is MLRO? So let's discuss about MLRO. What is MLRO? MLRO is Money Laundering Reporting Officer. Money Laundering Reporting Officer. That is, they might come up with a defense by saying that we have already submitted the details to MLRO. MLRO is the officer who is given the responsibility of managing the money laundering. Okay. Managing money laundering as in reporting part. When any report comes, how do you need to deal with it? Responsible for overseeing the organization's anti-money laundering and counter-terrorism financing compliance efforts. So responsible for overseeing, okay, the organization's anti-money laundering and counter-terrorism financing compliance efforts. That is, whether organization is taking active efforts or not, and if they are taking, how well they are functioning, how effective they are. Okay, now how to prevent money laundering. This is important discussion. How to prevent money laundering. So establish AML culture. AML as in anti-money laundering. Establish anti-money laundering culture. Okay. Appointment of MLRO. MLRO is given below. Officer who assumes the responsibility of overseeing all the transactions or all the activities of an organization related to anti-money laundering and reducing or eliminating the terrorist financing. Designate key person for risk management. That is, the person who is given the responsibility of managing the risk within an organization should be a key person. The person who has power and responsibility in his hands. Otherwise, the risk manager would be able to say that, or would be end up saying that we do not need to enter this transaction, but the top level might still do it. So the responsibility of risk management should be given to a person who is a key person for the organization, who has certain key responsibilities for the organization as well. Okay, implement systems for verification and record keeping, which is CDD. We have discussed it just below this. Okay, what is CDD? See, in case of banks, you might have seen that there is a system of customer due diligence. There is a system of KYC, know your customer, right? What do? They take your national IDs, they take your addresses, they take your phone numbers, they verify everything before giving you any account opening details or anything, right? Why do they do so? Because every company or every bank needs to have these details to do the proper KYC analysis, so that they can know that from which origin the money is coming, from which origin the money is going. Implement system for verification and record keeping. This is generally important for banks, but it is important for other organizations also. And staff education and training. There should be appropriate education and training given to the staff to identify the transactions of money laundering, so that if anybody tries to include them into the money laundering transaction, they should be able to identify that this might end up in money laundering, and they need to report it as well. They should be aware about their responsibilities as well. So what are certain parameters through which you can prevent money laundering? Establish AML culture, appointment of MLRO, designate key person. Key person is very, very important over here. That is, even if you have a risk manager, but that person is not a key person to the organization, who will listen to him, right? Implement systems for CDD and staff education and training. Education and training is very, very important. Now, when CDD should be done? When CDD should be done? So when establishing a business relationship, then CDD should be done. When establishing a business relationship, and when suspecting money laundering. When establishing a business relationship, that is first time. When CDD should be done? When establishing a business relationship, that is first time. And then whenever suspicion is there. You can also do it on regular intervals, say every year, every 5 years, every 3 years, you can do in that manner also. Okay, so I hope this is clear. Okay, now what are certain examples of suspicious transaction? So unusually large cash deposit. If there's a bank that has, and in fact, I have personally evidenced it also, if you make a large cash deposit, okay, say in my case, maybe if I say I have deposited 1 crore rupees in my bank account, then bank might flag that transaction and ask me, specifically by calling, my relationship manager would call me up and ask me that what is the source of this transaction, what is the source of this money, and if required by laws, he or she might end up reporting to the regulatory authorities also that in this person's account there is a deposit of 1 crore rupees, which is unusually high for him. Unusually large cash deposits. Then high value transactions with unknown parties. High value transaction with unknown parties. High value transaction with unknown parties. See, if you have made a business transaction, say in my case, I have collected a fees of say 10,000 rupees from a student. That is not unusually high amount. That is not from an unrelated party. However, if I am unable to justify it, say any person has deposited an amount of say 10 crore rupees in my bank account, and I do not have any business relationship with him, I have not taken any loan from him, then this transaction should be considered as a suspicious transaction. Transactions inconsistent with normal business patterns. For example, in my case, receiving the fees, refunding the fees, giving the amounts to employees, and printing cost, and all of these transactions are normal. What if I tell you tomorrow that I have paid one faculty say 50 crore rupees in the year without any benefit to the organization? Then it might be said that I have entered into a fraudulent transaction with them, I have entered into a money laundering transaction with them. With this, we have completed the basic details of this chapter, and now we will move to the next lectures, where we will be discussing everything about this chapter, and we will be solving certain questions as well. So in the next class, our agenda is going to be to complete chapter 1 remaining portion, okay, chapter 2 remaining portion, and solve questions, where the primary agenda is going to be solve questions also, because it is very, very important for us. This will not take much of the time. This might be completed in say 1 hour, but later we have to do what? We have to solve the questions. Now my friends, just to repeat for you certain core details. If you want to connect with me, okay, if you want to connect with me on YouTube or Instagram, how you can do that? You can do that via my username, which is ACCA with CA Supreet Agrawal. Okay, if you want to connect with me on LinkedIn, you can search me by the name CA Supreet Agrawal. If you have to get connected to my Telegram channel, you have to search ACCA with CA Supreet Agrawal. Okay, and if you want to buy my courses, what you need to do? You need to go to our website by the name of www.bbvirtualsglobal.com. Okay, that is how we need to do it. Okay, just in case if you face any trouble, please feel free to contact me on any given channels, and I hope all of your doubts have been resolved. Just in case if you have any doubt which is not resolved, please feel free to let me know. Okay, so thank you so much. I really enjoyed this session with you, and we have covered a lot of content today. We have covered chapter 1, we have covered basics, we have covered chapter 2 also. So thank you so much for being such a patient audience, and I would love to tell you that we are going to have a lot of fun in all of our next sessions. And will these notes be provided to you? Yes. Will these notes be provided to you? Yes. Will these board notes be provided to you? Yes. Will question banks be provided to you? Yes. Will board notes of question banks be provided to you? Yes. All of these would be, yes, all of this would be the soft copies. Okay, will it be provided to you? Yes. Okay, so now what we can say is got it for audit. See you in the next class.